Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Brian Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch for technical levels to watch in the Nasdaq-100. We'll also talk about broader participation in the market overall. Brian, it's great to see you as always. And one of the themes that you and I have been discussing is the narrow breadth that's in the market. And we finally started to see, with the significant outperformance in the Nasdaq-100, we're starting to see some catch up in other areas as well.
Yes. So, the big concern has been, massive outperformance by Nasdaq-100, the SOX index, technology, communications, even discretionary. But the concern there with that is that there's been very little participation. 8 of the other remaining 11 sectors have been down year to date through the end of May. The Russell 2000 was basically unchanged. The Dow Industrials was even unchanged. So it was really a very narrow leadership. And so we're beginning to see signs of that in this early part of June emerge, where we're seeing a broadening out in participation amongst different asset sizes in small caps and mid caps, as well as the other sectors.
And before we get into your charts here, I just want to ask you from a macro perspective, when you start to see that participation in the Russell 2000, 3000, small mid cap names, does that suggest that there could be an economic recovery on the horizon, or perhaps less fears of a recession once you start to see that participation?
I think it would, and I just think it's too early right now to say that that's what we're actually seeing. And so there's still a lot of uncertainty out there. There's still a lot of concern that there's a recession coming down the pipeline. If there is, the question is, when is that going to happen? It seems to be getting pushed further and further out. I see plenty of strategists out there saying, maybe now it's a Q1 24 event. Goldman Sachs just yesterday, I think, was putting a very low probability now on a recession coming down. So we saw a nice pop in the market yesterday with some other factors that was driving the market to the upside as well. But you are seeing, many people out there, an increasing number of people in the camp of a soft landing and potentially no recession at all. So that's, that would certainly bode well.
Well, the charts don't lie. Let's take a look at some fresh technical levels to watch.
Yeah, so first here what we're looking at is the relative strength chart of the Nasdaq-100 versus the S&P 500. And what I want to just highlight is that the daily RSI just came off last week of an 87 reading. That's an extremely overbought level. We haven't seen that since March of 2020, and before that it was before the global financial crisis back in like 2006, 2007. So an extremely overbought measure of momentum there. What this just says to me is, we've had a massive outperformance by the Nasdaq 100, almost to the point, we haven't seen this in such a long time. The last time we saw it was right around the lows of the COVID era, so that, what followed from there was a strong performance, in the overall market, particularly in Nasdaq 100 and tech. But I think in the short term, it may just suggest what we're actually seeing right now is that maybe things are overbought and could use some period of consolidation. In the Nasdaq 100 itself, we're looking here at the weekly period chart, and we had to use some candlestick parlance. Last week's price pattern kind of looks like a hanging man candlestick, which after a steep uptrend like we've seen since mid-March, that could be concerning and potentially a sign that this index is due for a period of consolidation. This week, we do have a red candlestick. We're down marginally, so nothing extremely bearish this week. We'll see how we finish and close out tomorrow. A little weakness tomorrow would form a 2-week bearish engulfing candlestick setup there. So then we would look to see what the following week does if there's confirmation for that. If we do have a pullback, then I think potentially what we could see is a retest of the breakout, which is down below at 13,720, and then we would look to see if the Nasdaq 100 can hold that level. On the equal weight index, Nasdaq equal weight, we want to see that better breadth. We did get a breakout last week, brief pullback yesterday, but we're still holding above that breakout level. That was basically the lows for today, so that looks good, but we wanted to see some upside follow through for this. And just back on the theme of broader participation, you can see the Russell 2000 small cap index, it's seen some upside follow through to last week's breakout. And really, what's interesting is the story what's going on within regional banks. We've had a 29, almost 30% rally off the lows. This week, or this month, I should say, in June, we're up about 13%. We've seen some capital raises amongst a number of regional banks that have been received well by the marketplace. So the yields have been lower above treasuries than what the marketplace was expecting, and there's been more issuance because of the how the market is receiving it so well. There's been greater demand. So I believe there's more. I believe this week there's been 43 billion raised. They were expecting about 20, so more than double, and there's more coming out today and potentially tomorrow. So we've seen a nice rebound. We're stalling just today. This is a weekly pattern here, weekly period chart on the KRE, the regional bank ETF. It's the #1 institutional ETF for regional banks per volume. And we're just pausing right now at a price gap that was made back from November 2020, so a near-term expected resistance level. But you could see that we've had a significant move lower in this ETF. It was down 56% from the Jan 21 highs. And even with this 30% rally, we're still about 46% off of those highs. So the math on that is we would need another 73% move to the upside from here just to get back to those January 21 highs. So you could certainly see a scenario where the regional banks can rally further from here.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.